Guys, I'm going to tell you the two things you need to understand to make you better than 99% of the investors out there. One of the friends of the channel, Professor Aswath from NYU, we had him on the show, and he made a profound statement. He said this: numbers without a story is just an Excel sheet. Stories without the numbers is just a fairy tale. So what does that mean to make you a better investor? Back in 1972, very famous partnership, Warren Buffett and Charlie Munger. They took their Berkshire Hathaway and they bought a company called Blue Chip Stamps. That company did $124 million in revenue. What was Blue Chip Stamps? Very simple. Basically an early rewards company. You'd go to the pharmacy, you'd go to the grocery store, you'd buy your stuff. They'd give you stamps for how much money you spent. And if you kept those stamps, you could redeem them in the future for other gifts, other merchandise, etc. So again, in 1972, when they bought the company, the revenue was $124 million. The balance sheet net worth was $46 million. Fast forward to 1981, and they weren't in love with this company, the business model of it. They were in love with something else. 1981, the revenue had gone from $124 million, $124 million in revenue. Look at all those zeros. In 1972, by 1981, 100,000 in revenue. Not 100 million, not a million, not 10 million, 100,000. That is the decline of 99.99% or so. But guess what? Here's the amazing part. Remember what I said? Their net worth as a company on their balance sheet was $46 million in 1972. What was it in 1981? $169 million. That is a compounded annual growth rate of 15%. So if I told you in 1972, here's a company doing $124 million, and in 10 years, it's going to do 100,000. You'd be like, I'm not touching that company. But Warren Buffett and Charlie Munger knew that the story didn't match the numbers. Why? They saw the float. That was the money that they owed out to people in the future. They said, we can reinvest that money. They bought a company called See's Candy. They paid $25 million for this company. In 2000, roughly back then, the company was worth $1 billion. From $25 million to $1 billion didn't include the $100 million a year that it spit off to them in cash flow. That's where numbers and story have to come together. The story was terrible on Blue Chip Stamps, but the numbers were incredible. Look at a company like Monster Beverage. Look at a company like NVIDIA. Look at a company like Microsoft, Apple, all these things. Usually when you're buying these companies that compound and compound and compound, the story is really great, but it seems like the numbers don't make sense. Look at Coca-Cola, another purchase of Warren Buffett and Charlie Munger. They bought Coca-Cola in 1987 at a PE of 30. Guys, a PE of 30 is pretty high. So the numbers seemed a little expensive, but guess what happened? It ended up being a fine investment, making them 11.5% to 12% a year over the last 34 years on one investment. You look at a company like See's Candy, they paid $25 million for, it was 3 times book value. I'm not going to get into book value is essentially the net worth on the balance sheet. And it has done phenomenally well. They bought a department store back then, I don't even know the name of it, for less than book value, and it went terrible. You look at Dexter Shoes, what they paid for it, it went to zero. That's what I'm trying to get across here, guys. You have to marry the story with the numbers together to be a successful investor. Now, let me bring you some examples that I want you to be a little cautious of. Back in 2000, we had a great company called Cisco. There was an article written, this would be the first $1 trillion company when it hit $500 billion in market cap. Guys, back in 2000, this is their revenue, $19 billion. Incredible. Look at their profit, $2.7 billion. Okay, so this company made $2.7 billion back then. Let's look at the chart. Look at the stock chart back in 2000. Look at this all-time high. All-time high was March 27th, 2000. We're coming up to the 24-year anniversary. $82 a share, all-time high. It has not hit that since. If I had told you back then that you'd buy this company for $82 a share and 25 years later, 24 years later, the stock would be lower, you'd say, oh my God, the business did terrible. Well, let's go look at the front numbers. Let's see what it did last year. $57 billion in revenue versus essentially $19 billion. That's 3x. Remember, its profit was $2.7 billion. Last year, $12.6. Almost 5 times the profit and the stock hasn't hit its all-time high yet. Why? Because people were attached to the story, not the numbers. They had to do the combination of them. They had to look at the combination. Back then, paying $82 a share for that share of the profit didn't make any sense. And even though the business went up 3 times in revenue and 5 times in profit, it did not change the fact that the stock has gone nowhere since then. When you overpay for a great thing, you can still lose money. When you underpay for a bad thing, like blue chip stamps, you can still make money. The question is, what's the right number? Now, guys, I'm going to bring you into my personal life a little bit. Whenever I have a situation, I like to go to extremes, and it's made me a better investor. And here's why. Whenever somebody says, oh, I wouldn't touch that. Great, would you pay $1 for it? Well, of course I'd pay $1 for it. Okay. Would you pay 10 trillion for it? No, of course not. So somewhere in between that extreme is the right price. And when I realized that about myself and about the world, it made me a better investor. Because all I sat there and said, okay, everything basically has a price to it. As long as I can figure out some value to it, I can assign it. That's why you'll see me say about some things, when I say the too hard pile, it means I can't come up with a value for it because I don't understand it. Or I don't think there's a value for it. I look at Bitcoin now. And Bitcoin, everybody loves the story behind Bitcoin, the blockchain, blah, blah, blah. I sit there and say, great, every single story about it. This is what I always say. Give me your top 10 reasons for buying it. If Bitcoin is 6 million or $6, it doesn't change any of those attributes. To me, that doesn't make sense to me, so I avoid it. Remember, story and numbers have to come together to make sense. If you're focused on just one, by the way, if you're going to focus on just one, focus on the numbers. You'll probably do pretty well. But to be the better investor, you got to marry those two together. Marry the story. And Charlie Munger taught Warren Buffett this absolute key, and this is why they bought See's Candy. He said, you should be willing to pay more money for better quality. And this is a change I've had since even starting this channel years ago. I realized about myself that I was a pretty lazy investor. I didn't want to have to sit there and research intensely on every single company. I didn't want to rip through annual reports. I sat there and said, listen, if I can buy a top quality business at a good price and hold it for a very long time, I will probably do better and probably save myself a lot of aggravation. Now, will I beat people who are ripping through small companies? No, they're probably going to beat me. That's okay. I don't need to generate 20% returns a year. But what I want to do is understand the story and the price and put them together. Just because I don't buy something that has a great story doesn't mean I don't understand the story. What it means likely is I don't sit there and see the value in overpaying for just the story. A few weeks ago, I was in Florida, and somebody was bragging about their NVIDIA position. And you know what they said to me? I don't even know what NVIDIA does. That to me is somebody who's just attached to the story. They're just attached to the story of the stock price going up. There's no other story. That's it. They didn't even know what NVIDIA did. And I laughed and said, wait a second, you own a company where you don't even understand what they do? That's problematic for me. Same thing in 2000 with all the dot-coms. And I was a baby of the late 90s, so I experienced that. When it didn't matter what the business was, as long as it had these 4 characters after it, it was a potentially multi-billion-dollar company. All it took was these 4 characters. Now, all it takes is saying 2 characters after something, AI. This is a chart showing the number of times S&P 500 companies have mentioned AI on earnings call in the last 5 years. And where did we see the big increase in pricing? During 2023. This only goes to Q2 23. Do I think AI is changing the world? Absolutely. We see it every day in this company and all of our companies. The question, just like the internet, changed the world. But if you overpay for a good thing and a good idea, it can still hurt you in the long run. And that's the main thing I want you to understand in this video. Guys, and if you want to have this conversation before this video comes out and any other future video, we have a great community at everythingmoney.com. We have a great special running right now, so go check it out. You get all of our community with thousands of investors plus the software, so go check it out. To be better than 99% of other investors, you need to take a story and you need to take the numbers, combine them together. And if you're able to do that, all that's going to let you do is say, it's a great story, but what's the price to pay for that story? Over the years, my belief in investing has shifted back and forth. It started out as story only, went to numbers only, and I'm finally at the point where I can believe that you should pay more for a great story. Now, guys, if this makes sense to you, do me a favor. There are over 30 companies that I want to own where the story and the price don't exactly meet right now. So check out that next video so you can understand the 30 companies I want to own at some point in the future.